Today we are going to go through the practice journal transactions that I have within Blackboard in a way to prepare you for what we're going to see in the manual practice set once we get into completing those transactions next week. So if you go into this week's folder, I want you to get into the practice transactions Word document, and then also the blank transactions spreadsheet that I have. So this is an example of the journals that we're going to have within the manual practice set. And then I want you to go into your manual practice, your Systems Understanding Aid packet, and find the instructions, flowcharts, and ledgers book. And then within that book, our flowcharts that we're going to be used to be carrying these out start on page 18. So it's just going to be a practice. This is going to be a big new thing as part of this class, is the flowcharts and getting an understanding of how to read, interpret, and follow them. And it's going to be a little tough at first, but we'll get there with practice. So let's just go through and start, and we'll see how it goes here. So December 14th, we received an invoice from Patriot Properties for $500 for office rent for the month. A check number 1152 was immediately issued for payment in full. So first off, what flowchart do we use? What journal do we record it in? And what is our journal entry that we use? So if you flip through your flowchart book again, once again to page 18, going through page 18 to 24 are the various flowcharts for the different types of transactions we may be completing throughout the Systems Understanding Aid packet. So you see those flowcharts are sales, sales returns, cash receipts, purchases on account, cash disbursements, and payroll. So first off, for what transaction we have here, we're paying our rent. So paying our rent would be an example of a cash disbursement. We're spending money. So anytime we're spending money, cutting a check, we're going to use our cash disbursements flowchart on page 23. And if you want to follow our flowchart over, I can pull up a copy of this on here. Flowcharts. So our cash disbursements flowchart, and basically we would just follow through step by step. So cash purchases and other cash payments would be the column that we're in. And all our transactions, all our things that we do, you see they're split up from the three different members of our accounting department. So that's an example of internal control. So that you limit the ability to get ripped off, you limit the ability of fraud by having duties split up between people. So first off, we received the invoice. We prepared the check. So imagine that we just wrote a check here. That's what you'll be doing once we get into the actual practice set. So we've got our invoice and our check. The boss looks over the documents, writes paid, the check number, and the date on the invoice. So that's a good policy when you get out in the world, that when you send in a payment for something, include a copy of the invoice with it, and then on your copy, write that you paid it, so we make sure we don't pay it twice. And then you scroll down to the bottom, the next one, it says make entry in cash disbursements journal. So you see that matching there. The title of our flowchart matches the journal that it's going to be recorded in. This is going to be a theme to our lesson this morning. So we use the cash disbursements flowchart. That's going to end up in the cash disbursements journal. And now we come up to our journal page, And we've got our general journal, our sales journal, our cash receipts journal, our purchases journal, cash disbursements, and payroll. So we want to find our cash disbursements journal. If you just click around through the tabs, kind of like I did here, you'll find that. And what did we say? It was December 14th. Our check number was 1152. In the description, we'd put who we wrote the check out to. And now you see in the journal here, they're going to give us some accounts to make our life easier. So you see we've got a credit side and a debit side. So for each journal entry, our debits have to match our credits, going back to your Accounting 1 rules. So we've got cash and purchase discounts in the credit side. On the debit side, we've got payable, freight in, and then other. So if we don't have a transaction that involves either accounts payable or freight in, we'd use the other column here, and we'd put in what our debit is going to go to from our chart of accounts. So first off, what's happening here? We're spending money. If we're spending money, our cash account is getting smaller. Assets get smaller with a credit. So we'd have a credit to cash for $500. And then what's our debit go to? Well, what resource did we use up? We used up the resource of rent. So then we would debit the account of rent expense. Well, now we would have to see what our chart of account is. Chart of accounts for this company. So you'd go within your Systems Understanding Aid packet and find document number 2. So document number 2, your chart of accounts, this is going to list everything in your general ledger that you could possibly use to make an accounting transaction. And you see it's broken down by the members of the accounting equation: assets, liabilities, owner's equity, and then your income statement accounts, revenues, and expenses. So you see down here under the expense section, we've got account 40,100 for rent expense. So we'd come here under the account number, type in 40,100, and for $500. So that makes for a debit to rent expense and a credit to cash. And now we've recorded a transaction. Our debit matches our credit. Life is good. Eventually, at the end of the month, we'll get to posting these to their general ledger accounts. But for right now, for the first steps, this is all that we have to do. So let's take a look at the next question. Question number 2, Olson Industries borrowed $20,000 from the First and Farmers Bank on December 16th by issuing a 5-year note payable with an interest rate of 7%. Check number 2984 was received and deposited in the bank account. So once again, our first step is to, which flowchart do we use? Well, once again, we got to go back to what is happening here. So it looks like we're taking out a note. So we've got a loan, a notes payable, and we're getting $20,000 cash for that. So we need to record that we've received some cash. So we're going to go into our flow charts, and we're going to go to our cash receipts flow chart. So anytime you take in money, if you receive a check, it's going to get recorded using these steps. So we would be under the receipt of cash flow chart here. So we got the check. We endorsed the check, so we signed it on the back. So it's ready for a deposit. There wasn't any purchase order with it, so we'd come down here and we'd enter it on the cash receipts pre-list. So this is going to be another document in your folder that you'd use anytime that you get a check. And then part of it is going to go, the check would go to record the deposit. The other part is to make the accounting transaction. So we'd keep scrolling down here and it says make entry in cash receipts journal and accounts receivable subsidiary ledger. Well, in this case, it's not a payment for something somebody owes us, so there is no accounts receivable involved. But we need to make the entry in the cash receipts journal. So once again, the cash receipts flowchart matches making the entry in the cash receipts journal. So once again, we record the date. The description, we'll put in who we're doing business with. And now once again, what's happening here? We got some money for taking out a note. So our cash is getting bigger. Cash gets bigger with a debit. So cash is in the debit column for $20,000. And then what credit is involved? You see we've got a couple of default accounts, accounts receivable and sales, and then once again we have an other column. So I just said a second ago that accounts receivable wasn't involved, so we're not making a sale, we're not doing what we're in business to do here. So once again we need to go to the other column and our chart of accounts. So we got the money for a notes payable. See, look here under your liability section, and we'd find that notes payable is account 21,000. So we'd credit notes payable, account 21,000 for $20,000. So we got a debit to cash, a credit to notes payable. Once again, we match. And that's what we want here. Assets get bigger with a debit, liabilities get bigger with a credit. Let's see, we received purchase order 278394 from Mayville State University, account number 412 on December 17th. Their credit approved and the order was shipped as requested. The total amount of the invoice, 731 that was prepared, was $5,700 and included in the shipment. So there's a lot of steps here. Somebody sent in a purchase order and said, I want to buy stuff from us. We said, okay. We sold them the stuff, we packed it up, we mailed it to them, and we billed them $5,700 for all the stuff that they wanted to buy from us. So our first question, what flowchart are we going to use? Well, for we're doing business, what we need to do, making money, we're making a sale. So that's going to be our sales flowchart. Actually, the page 18 is the first one. So pages 18 and 19 are our sales flowcharts. And this one's going to get complex. There's going to be a lot to it, but most of that we're skipping over until next week. So you see at the very start here, we're Nancy, received customer purchase order. So we would have that document. Just imagine that we have that. We filled the order. We prepared a pre-numbered bill of lading. So that's basically the shipping document that says how many boxes are we sending them and what we're getting charged for shipping. And then we'd have all those documents, the purchase orders and the bill of lading. We'd come up to the top of the next column and we'd make an invoice. And we'd send the customer the product and the invoice. And we'd have a whole bunch of documents then for making that invoice. And then once we go over to the other flowchart, then we can do the accounting. So this is a cash sale or a credit sale. It's a credit sale. So make entry in sales journal and accounts receivable subsidiary ledger. So once again, sales flow chart matches sales journal. So we'd come here to our sales journal, we'd put in the date, customer was MSU, invoice number was 731, their account number was 412. So once we got through that, the debit and the credit in the sales journal is actually pretty easy because we only have 3 options. Accounts receivable and sales returns in the debit column, and sales in the credit column. So in this case, we're selling something on account. We're selling $5,700 of goods and we're not getting paid. So when we sell it on account, that means accounts receivable is going to be affected. They now owe us more money than they did previously, $5,700 more. So accounts receivable is getting bigger, and it gets bigger with a debit. And then we have to match that with a credit. The only credit that we have is sales. So we credit sales for $5,700. That's our revenue account. That shows that we've done our job. We made the sale. We earned our money. Earned our revenue, I should say, in this case, since we haven't been paid yet. And then anytime we enter in accounts receivable ahead here, what's going to be affected is each company's subsidiary ledger. And that subsidiary ledger is just a list of basically how much does each customer owe us. So if I just scroll through my tabs here, I find the accounts receivable subsidiary ledger, and I would find MSU's account and I would enter it in here as well as a debit. This one is set up based on the practice set, which MSU is not a customer. So I'm just showing you that for alliteration purposes here. We'll get to doing that when we get into the real transactions. So debit to accounts receivable, credit to sales, we're in balance. Life is good. December 18th, University of Notre Dame, account number 13, mailed you check 8902 for $3,560. Payment on their account, specifically invoice $10,384. We deposited the check in the bank account on the same day. So what's happening here? So somebody's paying us, we're getting money. That's going to be a cash receipt again. So once again, we'd go to our cash receipts journal. And we'd be in the receipt of cash category. So once again, we receive the check. We would sign the check. We would enter it in our cash receipts pre-list. And we would make the entry in our cash receipts journal and accounts receivable subsidiary ledger. So once again, the title of our journal matching the title of our flowchart. So I'd go back to cash receipts. We'd put in the University of Notre Dame. Now what's happening here? We got money. We got cash. Our cash account once again is getting bigger. Gets bigger with a debit. But why did we get paid? Well, we got paid because they owed us money. And if they owed us money, that's represented by accounts receivable. And accounts receivable is going to get smaller with a credit. So we'd put in a credit to accounts receivable. So we got a debit to cash, credit to accounts receivable, and our journal entry is in balance. Once again, we'd go back to the subsidiary ledger and show that their account goes down by that much. In our last practice transaction, December 20th, we received new desks from OfficeMax that we ordered on purchase order 78290. It's estimated they're going to last 7 years with no salvage value, and we also got an invoice for $2,400. So now what's happening here? Well, we bought some desks. We bought some desks and we haven't paid for them yet. They sent us an invoice that shows that we owe them $2,400 for said desks. So we got to look over our flowcharts again. We haven't spent any money. We're not getting any money. We're not making a sale. So if we're buying stuff, we want to go to our purchases on account flowchart. So we're buying stuff and not paying for them. And you see there's steps for creating the purchase order, receiving the items, and then also the accounting entry. So we'd get all the items, we'd match up that what we received and what we billed for are the same, and then we'd come down here and we'd make entry in purchase journal and accounts payable subsidiary ledger. So once again, purchases on account, purchase journal. So see that matchup at the end of the transaction. So now we'll come into our purchases journal, December 20th, OfficeMax. We put in the invoice number. So once again, we've got debit and credit columns here. You see we've got a purchases column and another column in the debit side. In the credit side, we've got accounts payable and purchase returns. So the credit side, much simpler. We only got two options. So in this case, we're buying something on account. We're not paying for it. Our accounts payable is getting bigger with a credit. So we'd write in our account number for them and the credit entry of $2,400. And then now in this scenario, whenever we use purchases, it's going to be for buying inventory. Now in this case, let's assume that we're not in the business of selling desks. We're going to use these to work. These are going to be assets that we have and use in our business. So once again, we're going to have to use the other column, and we're going to have to represent what account that goes to within our chart of accounts. So we'll go back to our chart of accounts, and I said that this is going to be an asset. So we'll look up here under our assets section at the top of the page. And our asset is going to be here fixed assets. So our tangible property that we use in the course of carrying out our business that we have to depreciate is going to be our fixed assets. So our fixed assets is getting bigger now with a debit. So we'd find that account number 10,800 for fixed assets, and we'd come here in the journal and we'd record that. So we just did a debit to fixed assets and a credit to accounts payable. So we got some stuff, but we owe some money to pay for that stuff. Once again, our journal entry, our debits match our credits. They are in balance. So that's a little bit of a practice. That's kind of the mindset that we're going to go through within these transactions in the practice set. You're going to find the flow chart. You're going to do your best to walk through the steps in that flow chart. And then eventually you're going to fill out some documents and you're going to carry that out within a journal. So hopefully that'll give us some practice so we can get started next week within the practice set. Like I mentioned when I was going through the syllabus, I'll have PowerPoints in there. They will point you in the right direction on what you're doing in these early transactions. But if you have any questions on any of this at any time, please don't hesitate to ask.